Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Thank you so much for tuning into the episode today. Today, we talk about a very common topic that many people ask us as the accountant. That is when and what they need to think about when they hire a fractional CFO. And I know, like for many small business owners say whether they actually need a fractional CFO, that may be for just a big corporation. But I hope that this episode today, by the end of the episode, you will understand more about like whether your business actually need a fractional CFO and what can it have and transfer your business situation, especially your business financial situation. So a fractional CFO is actually like a financial guru that's sitting in your office corners. And normally in a big corporation or like normally a company for accounting and finance function, it will be including the first one is staff accountant that they take care of bookkeeping, daily bank transaction, account receivable, account payable, process the payroll. And then there's a senior accountant, which normally handle like more general lecture accounting functions like prepare book journal entry, payroll transaction, depreciation. Basically more general lecture and journal entry, taking care of the function of accounting in terms of like accrual accounting. And then the next level depends on how large the company. They also have the financial analyst, which is who normally take the information from accounting staff and the information in the accounting software to analyze the information to help the company, give the company the insight of the data, financial data. And then after that, they have a controller. Some company have an assistant controller and then the controller. Normally, they oversee the accounting function, make sure the closing process is taken care every single month. They do the cash flow projection. They make sure the company compliance with regulation in terms of accounting and tax. And depends on the bigger company, they also have a tax accountant. But that is the normal function. And after that, they have a CFO, which is the Chief Financial Officer. These people is more in terms of like oversee the overall the accounting function and finance function and allied strategy of the financial strategy with the company, business strategy. And then they think about like the direction where they can give feedback and insight to have the company owner, like the CEO or the owner, the financial decision that will be like aligned with the company strategy and mission or goals. And so basically, a fractional CFO is basically like the person that do similar function and tasks, but it's cost less for the company to hire fractional CFO or maybe like it's outsourcing with a fractional time and fractional costs compared to a full-time CFO. Sometimes the CFO also like taking care about the fundraisings and take care about like final report talk to the shareholders on the public accounting, like all the public company that listed on the stock exchange. That is the person will talk to the investor conference and earning report and company direction in terms of financial, all of that is a CFO. And then the fractional CFO will do like a fractional time of it or like at a fractional cost of it. But I know like normally big company don't actually have fractional CFO because normally these company actually need a full-time function CFO to handle like the complexity and the volume of the transaction and the information and financial report and strategy. So normally fractional CFO like more smaller side company, like from 1 million, a couple $100,000, go up to 10, $20 million revenue per year. That is where they have a fractional CFO, because they don't need a full-time person to handle the CFO work at all. And that also like have them to reduce the cost, because it's called as a fraction of a full-time CFO. So that is how normally a accounting and financial department look like. So when do you actually, as a small business owner, you need a fractional CFO? There's a couple of scenarios. First of all is when you are in growth phase. So your company, you're the first two stage of its like survival, and then you existence and survival, and now you prepare for you actually in the growth. You want to have someone help you so that you're not growing too fast and burn all the cash, because like in the cash flow, I already mentioned it, that sometimes grow too fast, it actually burn company cash flow and make the company fail, not because the concept is not proven, but this is because the company don't have enough cash to handle the existing obligation, which is I know in the growth phase, many companies go through this situation. And this is why the fractional CFO very important. They can implement the cash flow management, financial forecasting, strategic planning with you, and in terms of how your growth sustainable and align with your business goal too. And it also can help you to understand the financial implication on the growth strategy and make adjustment if needed. And then the second scenario is when you, as the business owner, face the financial challenges and need make a significant financial decision. And we, like our companies, has a lot of people coming in that scenario. It's because in the normal business situation, they just have a bookkeeper, and then normally that is why people think that this is enough. But then they go through the growth, and then the economy affect, and there's so many things affect the business situation, and then they face the financial challenge. Normally, they need us to have them to understand what is the inside of their business financial situation. What should they do to for example, increase their profit margins? What should they do to change their cash flow situation? Or like have them to make a major decision in terms of investment. I mean, like fractional CFO can help you to navigate this situation a lot, like analyzing your profitabilities, looking for you to like in terms of like cash flow situation, cash flow forecasting. I set up for you the budgeting, they set up for you the forecasting, all of this together. And then on top of it is the strategy, financial strategy to help you. Because most of the time when you face a business financial challenge, you have a very small fund that available a cash, and the thing that you need to take care is gigantic. How to actually become like more efficiency to use this small fund and use it in the efficiency way that you can use for many different things and solve your business financial situation at that time. And then number three is when you need to prepare to raise the capital, or you prepare to actually sell your business, you need your financial in a good shape. And this is when the fractional CFO coming in, look at your financial information and analyze that number and help you to tell a better financial story, a business story to the potential investor or potential buyer, and also get your financial in orders so that it look attractive to, of course, like follow the financial rule and accounting rule, not like make up something, but I mean like how to take that information and data and tell a better financial story in terms of like through the matrix, through the financial ratio, through the analyze the potential of the market. Does have to make your business financial profile actually so much better. So talk about like different type of fractional CFO. The number one is Projects-based CFO, that is when you prepare to launch a product, some specific situation that you want to like make a big, huge investment in your business, and you want to have someone give you like better logical data analysis and scenario analysis for you to help you understand whether it's a good choice for you to make that financial investment, or like how to like forecasting and launch new product is major situation for your business. That's the number one. Number two is interim CFO. This is a time when your full-time CFO is in the transition, and you actually, it's normally take a lot of time to find a good CFO, a great CFO that's suitable for your business. So you want to hire someone to do interim in like 6 months or a year while you seeking a new CFO for your business. Number three is reactionary CFO. And this is like basically you have a CFO in your pockets that you call them when you need it. It's just not like very proactive. It's more like passive. Like when you have a situation, you call them and they give a business advice, financial advice that help you to like solve the problem or make decision and at that time. And finally is operational minded CFO, which means that they more involved and understand your business deeply, provide ongoing support and strategy. They become a partner of your business. And this is one of the most that our company, our business doing for client is this. In this is operational minded CFO that we like become a business partner, and client normally like ask us the question, or we meet with them like at least one a month and go through like their number and talk about their strategy and anything that they plan to do moving forward, help them to do all the forecasts and analyzing, and have them like tell the story about their business situation. And this is more like involved than other type of fractional CFO. So the fractional CFO can look like a bunch of different things. Is like basic financial metric to provide the business insight, trusted advisory service. This may be including like profit margins, return on investment, inventory turnover, and these metrics will help you like it depends on your business situation whether you are in like service based or your product based, and each ratio or metrics is had totally different like role into your business situation. And more advanced fractional CFO, like they combine the financial data with non-financial data. It's like they look at into your understand your customer profitability, look at into your marketing data, and look into like operation process to identify like inefficiency. This level of analysis can provide so much more insight into your business situation more than just financial data. And finally, that is the level of trusted business advisor. They understand your business as a whole in terms of goal, challenge, markets. They usually like understand and provide a strategist advice beyond just the number. And this is like very crucial for many business in terms of like, I mean, like in the top economies too, because when in the top economies, your competition is very fierce. The fund and the cash that you have to you like financial resource for you to actually doing well in top economies is like small, and you need to make it in the efficiency. So if you have a very good business financial advisor, they may help you like avoid so many challenges and trouble in the top economy. And I can see this is so much in terms of some of the client that we work on very close, that in their mind they surprisingly doing very well, while many other people like other businesses face the challenge. But I think this they consistently look at into the financial and give the advice and review and strategize every single one that help them actually overcome the challenge or like avoid the challenge that they may face in this economy. So I can say like the truth is hiring a fractional CFO is not inexpensive at all. It's costs like between from 1,500 to like 10,000 or even $15,000 per year. But normally the fractional CFO that excellent is based for itself, because is give you the strategy and help you so much in terms of your business, like avoid your financial challenge, like solve your business financial problem, help you to grow the business and taking care like so many things in terms of financial. And I mean like for many business owner, when you started, you not like many of us not like specialize in logical, in driven in terms of accounting. Most of us is like have an expertise in other thing like creative or like professional like lawyers or doctors, or like you have the dream to bring this product solution to the market, but you don't have this strong sense of financial data and accounting rule and how to analyze and interpret and help you to combine the financial strategy with your business strategy that help you to like achieve your business goal. And that's just why the fractional CFO is so important for you. So before we wrap up, let's give a quick tip for hiring a fractional CFO. Number one, you need to understand and have a clear need. Define your need and expectation. What is you looking for the outcome, and what is your business financial situation and why you need them? What is the result? And looking for someone that have experience and understand the industry that you are in. Normally, financial principles are universal, and that is why they can apply the financial principle into many different business situations, but they need to have a very strong sense in terms of financial principle. And you need to have a check and balance out about the track records and consider their communication style that complex, that who understands so much in terms of financial concept, but also can explain it and talk and communicate and make it easy for you to understand and be clear about the scope of work and what is the expectation that you want to get help on. This is all to help you to understand what is a fractional CFO and how and when and what is you need to take in care when you consider to hire a fractional CFO. And I hope this help you to understand a fractional CFO is actually a very powerful resource and tool for you in terms of grow or like solve your business financial situation challenge. And I thank you so much for your time today. And I'm looking forward to you in the next couple episodes. Please review, subscribe, and let us know if you have any question. Thank you so much.